Well, ladies and gentlemen, this session is something you do not want to miss, because a moment missed is an opportunity lost. Well, with that being said, let's go ahead and talk about on the panel discussion, navigating financial stability, challenges and opportunities in a dynamic global economy. For that, we're elated that we have our eminent panelists and moderator who've joined us. For the moderator, we have Ms. Latha Venkatesh, Executive Editor of CNBC TV 18, along with her eminent speakers being Mr. Surti, Division Chief, International Monetary Fund, Mr. Michael Spiegel, Global Head, Transaction Banking Standard Chartered Bank, and Mr. Rajesh Kumar, Managing Director and Chief Executive Officer of TransUnion CIBIL. Let's give all of them a warmer round of applause whilst as we welcome them.
What we are trying to do here is marry a huge macro with a lot of micro fintechs. The topic, navigating financial stability, a big macro issue, and challenges and opportunities in a dynamic global environment. How does that relate to fintechs? That's what our panel is expert at providing in terms of perspective. Now, the global environment is both shaped by fintechs and it shapes fintechs. Surti from the IMF is here to tell us about how the global macros are placed. Will it be one of those seasons in the coming next 12 months where you can, raise money at 100x or at 200x or at whatever NVIDIA is quoting? Or do you think it will be a funding winter? So that relates very much to the audience here. And Michael Spiegel of StanChart is here to tell us how the incumbent financial system, the banks and financial sector, relate to fintechs. At what points is there a friction? At what points he will be able to use them for better banking? And Rajesh from TransUnion CIBIL is here to tell us how the fintechs need to help in terms of better due diligence or in terms of perhaps understanding that, what the RBI governor said, innovation, yes, but innovation with prudence. So he's here to bring that to light. I think we have an extremely well-rounded panel. Thank you, gentlemen, for your time. Jay, I want to begin with you. If you can draw up the macro environment, both in terms of, economy and say private equity and venture capital, do the next 12 months or, the foreseeable future look like a robust time when the fintechs will be able to find good funding? Or do you see red flags? I mean, the Nifty is at its all-time highs. The NASDAQ is at all-time highs. So is it going to be good funding period or is it going to be some funding winter because of a red flag?
Sure. Thank you, Latha. And I wish to thank the organizers for inviting me to this year's GFF and to be on the panel. Just a quick word that the views I share today will be my own and not those of the International Monetary Fund, its management and its board. I think, Latha, an appropriate starting point is financial stability risks from higher for longer rates. This has gradually been priced in the US, and it certainly has strong implications potentially for global markets. Now, at the moment, markets appear to be comfortable with the current outlook and scenario, but there are three things to watch out for. First, uncertainty remains high, and fiscal and political uncertainty in particular, we have seen is already generating a lot of data dependence, which has led to volatility in markets. This brings me to the second point, which is emerging markets and developing economies are no longer viewed as being decoupled from US monetary policy. And third, on sectoral vulnerability, a cohort of households and corporates do appear vulnerable. So I'll just take 2 minutes to briefly go through this. On the first, on uncertainty and rate expectations, at a global level, high uncertainty has already led to volatility spikes. We've seen this in foreign exchange markets in some EMDEs. We have seen that in some spread widening of sovereigns over safe asset returns. What's important is that in the US, the strength of economic activity and sticky inflation are being reflected in expectations of increased inflation and policy rates. And what this basically means is that if there are shocks and surprises, you can expect long-term US rates and therefore global credit conditions and financing conditions to tighten quite rapidly.
Tighten going forward.
Well, it depends. As I said, if there are adverse shocks and surprises which reflect some, kind of realization of risks
So you're
around
not in the camp which says that we have already seen the highs of interest rates. You think that
I wouldn't quite say that. I think what you described as the current outlook, that there are benign funding conditions, that EM financing conditions have been good, rating outlooks have been sort of improving. Net rating updates are now in positive territory in EMDs. If you look at equity market funding costs, these are, equity markets have been buoyant, credit spreads are at historic lows, there are some exceptions. This is all true. It's just that the kind of uncertainty we have around the outlook, and particularly given that this uncertainty has political and fiscal ramifications, is still quite high. And so the likelihood of things going wrong is still high. And as a result, if some of this uncertainty realizes in the wrong way, then you could have a whiplash in markets. And so the sensitivity of US long-term rates does appear to be high relative to some of these uncertainties being realized. And my point about EMD is not being decoupled is that if US long-term rates were to go up, then this could whiplash across the world, basically. So that's where we are.
I mean, this is a topic for a whole day or a couple of days, actually. But are you a believer that we will get or we are in a soft landing? Or do you think we are being too confident?
So I think it's a little bit difficult to say at the moment. Our view was, in July, about a month ago, was that the outlook was, as we described, the central outlook was looking kind of softer, but we are seeing, there are two types of issues here. One is the political uncertainty, and that seems to flare up again and again.
Yeah.
There are two centers, at least in the world, where this is particular, but everyone is involved.
Yes.
The other thing is basically fiscal uncertainty, and public debt burdens are very high, and therefore, mistakes can be costly.
Yes.
Fiscal authorities need to do a lot to sort of tighten and lower leverage. And there's a lot of refinancing needs coming up in the next 2 years in frontier markets.
Yes.
So there are pockets of vulnerability which may actualize if some of this uncertainty kind of realizes.
Okay. So I think Jay has put all the warnings on the table for those who want funding and those who are looking at a stable environment so that business can go on for fintechs. Which brings me to the person who represents the incumbent financial system, the large bank, Michael Spiegel from StanChart. Michael, let's assume that the global macros don't get so bad. As a key banker, how are you looking at the fintech space? Do you think they are abetting banking transactions, making it easier to do due diligence, inclusion? What's the report?
So look, I think Bill Gates kind of started a big notion and motion sort of in the 1990s. So in 1990 he said the world needs banking, but it doesn't need banks. And in 94 he topped it saying that banks are dinosaurs and we can bypass them. So we saw a huge increase in investments into fintechs. And I would just add one element potentially, and that is that from an equity perspective and from a VC perspective, due to the higher interest rates, there's less patience. So I think there's a bit more pressure on startups and fintechs as well to generate positive cash flow. Now, are there positive or negative? I think generally I welcome fintechs very much. And I actually think it's been very good for the banking industry. Now, some people say banks are not innovative and only fintechs and tech companies are. I think that's not quite entirely true. My personal view is that the world will continue to need banks and in all economies, but it needs banks that have adapted to the new norm. And in my view, and I've held this for many years, the old ecosystem of one bank to one client relationship is passé. So what we have is banks, clients, fintechs, tech companies, and ideally regulators. Now, regulators you don't really have in every market as well as you, for instance, have in India. When you think about the development of UPI, which was initially driven perhaps more from a government perspective and then taken into the private sector bank, fintechs, foreign banks invested, And now you have the world's largest fast payment system, right? I mean, you had 47%, I think, I may be wrong, in 2022. You have like 12 billion transactions a month. Just amazing. So fintechs play a critical role. We compete at times, of course, right? Fintechs shook some of the banks up, absolutely, and we collaborate. When you look at our organization, Standard Chartered, we are a global network bank. So we connect the world and we bring the world to our clients. Quite often we do this together with fintechs because we cannot develop all of the solutions ourselves. So we collaborate in many instances, and we collaborate also with large tech companies. Now, many of them have banking licenses. None of them wants to become a bank because there are pros being a bank, and there are also some more challenging environments as you have a different regulatory environment, right? So, you know, I mean, to me, it is both. They are competitors. It's a little bit like banks amongst each other, right? So we do not only service corporates and fintechs. Actually, we provide the rails for many fintechs in the last mile and cross-border. The banks have a significant role to play. We also provide services to our, if you like, competitors and collaborators, other banks, their clients. So it's all a big macroeconomic, a big macro system.
There is a lot of give and take, but are you at least settled on one thing? Initially, as you said, Bill Gates and a whole ecosystem of leaders almost said that banks would be replaced by fintechs. But are you now sure that it's not a question of replacement? At least the central banks are batting on your side. So it's not a question of survival. It's a question of how you will perhaps use fintechs. That debate is over.
So I think, but you have to, you can't stand still, right? So you have to continue evolving and adapting, and you have to take things not defensively, but you must see it as an opportunity. It's a bit like fail fast. The most important one is you always fall forward, not backwards. So you just need to continue evolving. Yes.
Fair point. Okay, let me just scratch that point further with Rajesh. Rajesh, yesterday the RBI governor spoke about a unified lending interface. Can you say that fintechs have been able to speed up the banking process?
Oh, absolutely. I think when you look at, let's first talk about the ULI as a national infrastructure. And we'll link it to your question and the core of our topic, so to say. First of all, as a national public infrastructure, a digital public infrastructure, I think it's such a natural progression, right? Many years ago, we started talking about the jam trinity. And as the governor says, the jam trinity, and then obviously payments, UPI, we spoke about this huge volumes on UPI. It's just so natural. I mean, it's just a pure natural progression to go on to ULI next, where you have all these disparate data sets which are not talking to each other today. And I do believe that we have an important actionable there as an industry. We have GST information, we have NPCI information, we have a whole lot of digital public goods, but all of it is not easily available to everybody to still use it. And to start with the agri side, let's say the more needy segments on the agri side, small businesses, to start with that on the ULI with the banking system, and then obviously very soon it will be available to everybody, including fintechs. I think it's a huge step forward. From a very infra perspective, like I said, you can so easily get access to all data. Then let's talk about the borrower, us the individuals, right? You really look at most of these kind of transactions, it really is totally based on trust. A borrower and a lender can be in different parts of the country. They don't know each other. More so with all this digitalization and digitization that we talk about. They don't know each other at all. It's totally based on trust. And how do you develop the trust with a stranger who you don't know at all? Then it's good quality information, right? So for the borrower, platforms like this or infrastructure like this at a national level provide us the ability to represent ourselves well. I don't know what to give the lender today, and the lender doesn't know what exactly to ask me. It's all more towards convenience. If it's all digital with a consent and seamless and frictionless, then everything that the lender needs to know about me, it's so easily available, process it. So it's good for the borrower. And lastly, for the lenders, as we briefly touched upon in our chat while we were waiting. Today, when you look at the fintech world and a whole lot of these digital public goods and infrastructure, it's all a little fragmented again, right? So even for the lenders to take advantage of this lovely digital stack that we are developing as a country, even for lenders, it's very difficult and challenging to go integrate with each separately. You have one good unified platform. So it's a win-win progression. And coming to the fintech's point about banking, it's going to be very interesting. I was on the other side in the banks when, like he said, Mr. Gates said what he said in '94. I used to work for a bank where people used to come and say, in 5 to 10 years from now, your department won't exist, your job won't exist. Most of the people in your team won't have jobs, right? Because the technology will replace those jobs, etc. We will go through those cycles. I hear similar stuff now about AI, right? Just like with the economic cycles, right? We all go through the cycles. When you look at it in the short term, it looks much more intense than it is. But over a long term, it all evens out. So to sum up the last point on this, I think some of this infrastructure will further help the fintechs, who in turn will further compete, collaborate, or work with the banking system. It's a win-win for everyone to progress, I guess. Yeah.
No, I agree with you. Actually, just a word on this unified lending interface that the Reserve Bank is speaking about. It's a pilot. It's not yet scaled up, but the entire banking data is already digitalized. So if you're plugging on to the ULI platform today, the lending bank will know the borrower's entire financial, what insurance policies he has, what pension policies he has, what bank accounts, all that is available. Also available if he's a small business, what taxes he's paying, because the GST is integrated. What is not integrated is land records. If he has collateral of a land, that's not yet integrated except in some places. But where do the fintechs come in? If it is so well done, is there no work for fintechs? I mean, for UPI, we realized the fintechs came in. We pay by Google Pay, we don't pay UPI. We pay through Phone Pay, we don't pay so much through BI. So fintechs still have a place over there. Just one more word before I come to Jay on the technology and safety aspects. Michael, have fintechs been able to, okay, we'll let that wait. I'll come to the due diligence part in just a bit. Jay, as a regulator, I mean, you represent the regulator in this discussion. Are you worried about technology as creating sudden risks? Like, Microsoft 365 and CrowdStrike, suddenly you couldn't fly, airports, banks, everyone. What's the IMF point of view in terms of cyber risk?
Yeah, sure. So we are all aware of what happened on July 19. Windows machines worldwide began experiencing crashes due to a faulty channel update to CrowdStrike Falcon. Now, this outage was not triggered by a cyber incident. There might have been some threat actors who tried to take an opportunity, but this was really not. This was an accident. But nonetheless, there was widespread disruption that was experienced across sectors. CrowdStrike provides cybersecurity solutions that are reportedly used by some systemically important banks globally and also by critical FMIs. And so the impact on the financial sector was, while short, quite significant. So, the CrowdStrike incident brought home potential systemic risks in the technology domain that are really embedded in the supply chain, notably third-party service provision, concentration in critical service provision, and single points of failure. And I just wanted to spend a couple of minutes reflecting on the intensifying cyber threat landscape and what it means for financial stability. So we presented some analysis in our April Global Financial Stability Report in a chapter called Cyber Risk and Financial Stability. And basically our view is that although cyber incidents have not so far presented systemic threats, if there is a significant cyber incident at a systemic financial institution, this could pose potential macro financial stability problems. And in fact, central banks and regulators are already viewing cybersecurity risk as a material risk and actually as a source of potential systemic risk to financial stability. Now, one thing is there, which is whether we like it or not, cyber incidents are going to continue to occur. And what this means is that when in terms of response, while protection measures, ensuring that they are adequate is actually very important, it's really what the response and recovery preparations are, which is really of paramount importance. Things like, computer emergency response teams and their financial sector version, the FinCerts, and critical infrastructure protection agencies are already, but in fact in the future are going to play even more prominent roles. And at the national level, governments need to engage with supply chains to minimize incidents and to establish backup arrangements, not just with tech firms, but in fact with the power and communication sectors. I mean, if you mention regulation, from a central bank's point of view, in order to do its surveillance role properly, more and more central banks should begin expanding their vocabulary of stress testing and systemic risk analysis to incorporate meaningfully cyber risk stress tests.
I must add over here, I think the Reserve Bank is up on this game. I know of bankers who tell me that all that the central bank is asking them is, just give me your login and I'll check what kind of process checks you have. So it looks like they're up on that. But just a quick question over there. The Reserve Bank in its next 25 years, their Amrit Kal plan, have said that they're actually going to develop a local database. That is, they don't want it on AWS or some other cloud. They want an RBI cloud or an India cloud. Way to go.
So, I think there are many views about this. I can see what for any nation state the rationale for localization of data is. It not only has national data privacy and security, issues, but also in terms of the ability to supervise. Big tech supervision is difficult. Big tech supervision from a financial...
It's a sovereignty issue, actually.
Well, but it's also a supervisory issue, in the sense that big techs do not conventionally provide financial services in their home countries. From a home supervisory standpoint, therefore, this is not an issue. But in many emerging and developing economies, big techs do provide financial services. And the question is, how do you actually supervise these activities? If you have access and control over the data, you are in a much better position to do so. I just wanted to mention a couple of things, which is, of course, authorities need to step up on the cyber side. But actually, our work, my division has been doing this work for about 10 years, particularly in emerging and developing economies. And I think it's also that, the financial firms also need to step up. I think their reporting on cyber incidents to their supervisors needs to be strengthened. And supervisors, in turn, need to hold board members explicitly responsible for maintaining a conducive risk culture on the cyber side.
Fair enough. Fair point. Well, just as a matter of anecdote, Reserve Bank and other banks, other central banks around emerging markets were clearly worried when Facebook announced Libra. And it was a very big boon to them that the person who felt most challenged was the Fed itself. So they found a friend there. But Michael, just coming back to this cyber risk, banks wanted to host everything in their own servers. But now you just have to go to cloud because it simply expanded and the fintechs threw that challenge at the banks. What do you perceive? I mean, you have to share the data, you have to put it out there in the cloud. So how are you looking at this risk, which may come through fintechs, which may come regardless?
So I find the topic of cloud very interesting because there are so many different clouds. You have your private cloud, which is your own data center. And then you have a private cloud where somebody else manages the data center for you. Then you have a private cloud where you sit in a public cloud, but it's isolated, you sit in a public cloud. Let me just be clear, banks do not openly share data, full stop. We're probably the most regulated, and that's a good thing, right? We do not share data, right? So if anything we share would be metadata, completely anonymized.
I take your word for it.
So just on that one, we're not going to put on things. And so where do we, so we're in some markets, we're in the cloud. So I'm rolling out a latest tech stack global payments platform, which is already in India because India is a very demanding market. So you want to be on the latest technology that is cloud native. It is microservice enabled. You can parameterize it. It is a great system. It does sit in the cloud in India. It does not sit in the cloud in a few other markets because of local regulatory concerns, or shall we say considerations. So it's not one or the other. It is going to be all together, right? And more countries do actually go and require data localization, but it doesn't mean that you can't have it in the cloud, because there's no such thing as a thing in the cloud globally, right? I mean, the data sits either in the country, like India is data localization, many other places are, and so we had to put more servers in here, which is a good thing, right? And fully understand where they're coming from. And then there's more global sharing, but generally it's anonymized, and that is something that probably will go from a supervisory perspective, will probably broaden beyond the banks over time, because that's one of the considerations regulators or supervisors have, that there's a bit of an uneven regulation at time, right? And as you said, I mean, you don't regulate some of the large tech financial services back at the home country because they don't want to become a bank or a fintech at home, but outside they do that. And I think that will get harmonized over time. At the end, I just want to emphasize that again, it is the collaboration that's going to make this all work. None of us can do that on our own. Also not the large tech companies, they probably have most of the resources. I want to say one more thing to fintechs. And our previous, or two previous speakers, and I have to look up. So Sri Mahavir Singh said something very interesting. He said the private sector and fintech are critical for further development and inclusion. I think fintechs have brought a massive benefit to financial inclusion and make more people bankable. And this is a great success and a great benefit we drive, and we can actually benefit from this together. So I think that's a good thing.
Absolutely. But just very quickly, this is out of syllabus question. Do you think, Michael, and I mean, I asked Jay as well, like the Reserve Bank put the UPI as a public infrastructure, the cloud, which I think the Reserve Bank is determined to put in, will also be a public infrastructure. Will we see a lot of central banks doing public infrastructure? A quick answer, Michael.
Do we see a lot of central banks?
Central banks putting in digital public infrastructure.
Well, I think India is quite advanced, and a lot of countries are scratching their heads. In my mind, yes, you will see more because there are clear benefits to it, right? There are many different considerations at the moment. If you look into what central banks do with central bank digital coins, right? I mean, we participate quite in a number of initiatives. We were talking about Singapore before, connecting India with Singapore, Project Guardian from the MAS, Project Ensemble from the HKMA. So there's a lot of those developments. I would say it always goes at different speed. So there's different speeds to it.
All right, then I'll end that topic over there because we have 13 minutes. Rajesh, I think the big point, and you are, in CIBIL, you are looking at credit scores or designing credit scores. Do you think the big support that fintech can give to the entire financial sector is improving diligence?
Oh yeah, absolutely. I think that's very important. One of the key points, or I would say answers that I am yet to be fully convinced about is the differentiation that fintechs bring to the traditional banking system, or let's say overall across the products and whatever business models. So what exactly is the differentiator has to be defined well. I think so far what we have seen a lot of is convenience for sure. And because the fintechs operate primarily in the digital world, obviously there is much quicker processes, right, versus the physical processes. That's a no-brainer. So when you talk about due diligence, I think a lot of work to be done there. We spoke earlier about these nice platforms and data sets, but the real usage is to come out. And few areas where I think it will help when we talk about due diligence, right? We're talking about new to credit. And And we know that in India, given our goals on financial inclusion, given our demographic composition, right? Such a large young population,
Given our informal
informal
economy,
credit
you
as
don't
well.
think that fintechs will perform well?
Absolutely. There's such low credit penetration. This is where I think there's a huge opportunity for fintechs, MSMEs again, right? And we'll come link all of this to due diligence to say that how do fintechs use their innovations and their superior technology to bring in this due diligence, right? Now, it can be traditional data, it can be alternative data, it can be behavioral data, obviously within all constructs of privacy and consent based, right? So I think when it comes to due diligence, what new information can you bring which can give more confidence to lenders? And my last sentence on this, I think the fintech world we can probably say that the fintech world has really arrived or reached its point of arrival. I think I would kind of accept that on the day when we say that new to credit versus existing to bank, on the day that we say these two have been equated, because the only
That's a
real
good
difference
challenge.
is only information. Latha could have an account with a large bank, she could have a savings account, credit card, she could invest through that bank, they know everything about her. So it's easy for the bank to do due diligence on her, right? But let's say there's a youngster who's just got his first job and he doesn't have that many accounts with a large bank. That's a great opportunity for fintechs, but that is the real innovation for me. I think just information moving quicker for a faster process, it's just the beginning then.
Is only incremental.
Yeah,
But
yeah.
if you want it to be paradigm shifting, it
Absolutely.
will have to be
Yeah.
for a new. Well, if they are able to tell me how much electricity that a person consumed,
Yeah.
how quickly he paid his telecom bills,
Yeah.
or what is the size of the telecom
Yeah.
bill
Yeah.
that he is recharging every day
Yeah.
or every month,
Yeah.
then that will be a new to
Yeah.
credit
Yeah.
advantage. And I think fintechs are out there to grab those
Yeah.
kinds of
Yeah.
challenges. Incidentally, somebody in the US recently, when I was there, told me that they can give me a loan looking at my Uber score. So, that's not asking for my civil score, asking for
Absolutely.
my Uber
Yeah.
score,
Yeah,
which I think
I'll
is a
just
great
step in.
fit.
I'll just step in again, Latha, for a minute. When you think about this probability of default, right? When we say probability of default, default is not some standalone and isolated behavior, right? Default is a function of our general
Yeah.
behavior, how we generate cash and how we spend it. So things like this Uber score, right? There could be so many other aspects of my behavior which could indicate my probability of default, other than just the regular bank account, bank balance, etc.
Absolutely,
Yes.
absolutely. And there's a lot of difference between whether my Uber score was 5 or 4.95 or whether it is, 3.
Yeah.
So, the Uber score could only go that far.
Yeah.
But it's a very big innovation, I thought, which the fintech brought. But, if AI becomes a reality, then, the whole thing changes. The fintechs can be game changing. So let me use the last 9 minutes, 3 minutes apiece on how do you see AI. Mike, you go first. Uh, do you Have you already using AI for diligence, customer identification, and how do you see it?
Yes, of course. We've been using AI for many years. All banks have, I think. So I don't know. We're talking a lot about AI these days, right? While actually, what spurred this is large language models, which has changed the dynamic of AIs, and is not the traditional AI. So we use a lot of the traditional AI in many aspects, whether this is payment repairs, whether this is pattern recognition, whether this is fraud detection, and we're working with a number of fintechs together. So quite often we find their analytical capabilities and their ability to extract data from sometimes legacy systems quite advanced. But it has, for us as banks, it always has to sit inside. So even if I sit in a cloud, the fintech extracting my data, analyzing, will always be sitting within my environment and it will not leave my environment. So we've had actually discussions with one of the largest data analytics company in the world, and they are fabulous in deep AI, but we can't use some of it because the data would have to travel cross-border. That doesn't work for us. And certainly there's a sovereignty issue, there's a jurisdictional issue. So the other piece on AI is, I think people with large language models, of course, it's all predictive, right? So it's not predictive, sorry, it's the next probability.
Generative.
Now, if you have, with generative AI, now if you have 700 billion nodes in some time in the next generative AI, it will be a lot more accurate, but it is still not factual. So I think the way we all need to look at AI is IA, so intelligence augmentation. So we got to use AI to be better, right? We should not shy away from it. So everybody should have, whatever it is, any of the AI. I don't want to name any of them, but and play around with it. It is quite fascinating what kind of videos you can create, what kind of mails you can create, what kind of CVs you can create. It looks a lot better than when I write it myself. Now I don't need one, but it's just fun. I just think it is fascinating and it is critical for us to use it. It is also tricky because the reliability, and this is again where in banking it will potentially be a bit slower in some areas because you have to have the data governance and you have to have absolute statements there. So there is a whole evolution and discussion with the regulatory body, which is a very healthy one. And so I very much welcome that.
Your thoughts, Rajesh, as a person always grading people for their credit worthiness, do you think that you can AI will help us find more credit-worthy MSMEs, help the MSMEs in some fashion? How do you look at AI?
Oh, absolutely. Again, it's just the next progression. I say this because in 2005, in my prior organization, when I started analytics, right, we went through the same set of apprehensions when we built a whole lot of credit models. I remember the first few supervisory audits in the bank, they used to ask me, are you doing credit risk or model risk? Right? Because so many decisions, transactional and strategic, are being aided by models, right? So it's the same thing now in another form. The form factor has progressed to AI, right? And I go back to the same principles on hand. All of this comes out of some innovative thinking. So first is responsible innovation. Second is obviously transparency, be it a model here or an AI model or a regular model, analytics model. You want transparency, you don't want black boxes that don't explain things. Third, obviously biases, because all the development of models, be it regular models or AI, we use the existing data set. So inbuilt biases will come back into that. These are well known. So what we did then as caution, it's the same thing to do again now on the technology itself. And couple of quick points. I think it's about when you go into new technologies, I think it's super critical to calibrate that well, right? So first you do your champion challenger kind of test. You have your existing models which are used for years. When you develop a new model, run it parallel for some time. Don't go live immediately. Test it thoroughly. Good model governance in terms of the right kind of decisions being taken by the teams making those models. And then I think it's also super important to monitor the performance of the models in the initial phases so that if there is some calibration to be done or recalibration, you do it quickly and don't wait for the damage. And India is a large country and you could do a few thousand, few million loans in no time. So I think it's important to have an incremental approach where you keep testing before you grow very blindly. But I'm sure in a few years from now, we'll be sitting on a forum like this and there'll be something else and I'll have similar story about AI again.
Yeah, exactly. You said incremental, but technology is never incremental. It is always game changing and paradigm shifting. But, what is the received wisdom in the IMF? You're seeing several countries. What's your view of AI? Is it destructive, constructive? What?
Um, I'm going to leverage off, what Michael and Rajesh have said. There's no doubt about the enormous social and economic benefit. Uh, it's not a new technology. As Michael said, machine learning and AI have been around for a long time. And so we know already that, it can fundamentally reshape and make efficient a lot of provision of financial services. It can reshape client interfaces, it can enhance, and it has enhanced forecasting accuracy. You were talking about your Uber score being relevant for your credit pricing. I'm sure that those guys are basically extracting large and big quantities of big data, putting it into machine learning algorithms and basically talking about correlations. But that's just one example. It can also improve risk management. And it also helps supervisors do a better job regulating and supervising firms, and central banks fulfill their mandates better. So we know all of this. The concerns we have are also well known. And those arise from risks that are somehow inherently embedded in the technology. So things that we are familiar with are embedded bias, opacity of outcomes, robustness relative to cyber threats, and privacy. And then there are new things. In generative AI, for example, issues about homogeneity and risk assessment. I think Rajesh and Michael both hinted at those things, and how that affects credit decisions. There is an efficiency element, there's a stability element, and there's a fairness element to some of these things. So I think overall, our view is that it's very, very welcome at a very broad level, together with preparation that can help us capture benefits and also mitigate the potential risks.
Well, I think our experts have traversed a very, very large terrain, and I would be too ambitious if I tried to wrap it up or summarize it. We began by saying that the global environment for fintechs don't take things for granted. It isn't as if the funding winter will not revisit us. So beware of that. But beyond that, the financial incumbents, if I can call Michael and Rajesh that, do find fintechs most useful and see a vista of opportunities in which both speed and safety can be improved by the fintechs. What space and what form AI takes, we do not yet know. Will it change the global macros itself? We do not know. Will it make all the jobs that we are doing be done by 2% or 10% of the population, and the rest of us only get a basic income from the government? We don't know if that's the world macro, or whether it will be much more pleasant and all of us will have great more leisure time and comfort. That's something we await from the fintechs to answer. Thank you very much.